Okay, welcome back to the Investing Markets and Money podcast from the Armchair Trader. And this week we're catching up with CleanTech Lithium, which regular listeners will know we have spoken to before, but a lot has happened since then. So today we're being joined by Steve Kesler, who is the executive chairman of CleanTech Lithium, for an update on the company, what's been going on there, and also the wider lithium market as well. Welcome to the podcast, Steve.
Yeah, nice to join you.
Very quickly, there will be some people listening to this who are not familiar with CleanTech Lithium. So to start off with, can you give us a quick summary of the company and what it does for them?
Yeah, sure. No, CleanTech Lithium is a AIM-listed company. We have a portfolio of lithium projects in Chile. These are lithium brine projects. We have two advanced projects. The most advanced is called Laguna Verde. We're currently in pre-feasibility study, aiming to bring this into production at the end of 2027. I say no. Chile is a lithium country. It's a mining country, a great country in which to develop projects.
And Laguna Verde, how far along are you with the project at the moment? Can you give us some idea of its scale and where you are with the overall development program?
Yeah, we've done drilling over the course of the last couple of years. We've declared a very significant resource, 1.63 million tons of lithium carbonate equivalent. And we have expectations that that will grow larger as we do more drilling. In 2023, we completed a scoping study with potential production of 20,000 tons a year of lithium carbonate, with very robust economics, very low operating costs at the low end of the cost curve, about $4,000 a ton, which is very competitive. We're currently doing a pre-feasibility study with Worley, the Australian engineering company, very experienced in doing lithium projects in Chile. We've got that scheduled for the end of this quarter. Um, as I mentioned that we are AIM listed, but our largest shareholder is Regal Funds, out of Australia. They've been encouraging us for some time to dual list on the ASX. Australia has many natural resource projects. There's deep pools of capital for natural resource projects. There's over 30 lithium companies listed in Australia, and the belief from Regal is that when people see the quality of our project, we'll see a rotation out of some of these hard rock projects into our brine project in Chile, and get a re-rating of our share price. So we're at the closing stages of preparing the prospectus and ready to go for the ASX listing in the next couple of months.
And the actual project in Chile, I mean, what sets it apart from other lithium projects? I mean, you mentioned already it's a brine project, but it's a bit more special than that, isn't it?
Yeah, Chile has always used to be the largest lithium producer in the world, from SQM and Albemarle. These are brine projects, but using evaporation ponds, so the water from the aquifer is evaporated. We are different. We are going to be using direct lithium extraction technology, where we pump the brine from the aquifer, remove the lithium from the brine onto an adsorbent, and then re-inject the brine back into the aquifer. So there's no water depletion from the aquifer. And we aim to use renewable energy for powering the plant. So we'll be producing lithium with very low water consumption and with very low carbon intensity. So this is what we call green lithium, to put into the markets.
And last time, in fact, that green lithium issue, last time we spoke to CleanTech, that was considered to be quite a big selling point for some battery manufacturers, for example, because of the fact that it has such a high environmental credentials.
Well, there's two things, which are, I think, are very important to consider. Is that governments are encouraging motor manufacturers and battery manufacturers to not just to decarbonize their car manufacturing, but to make sure that the supply chains going into those batteries also come from sustainable sources. So here we are able to produce green lithium in comparison to the hard rock projects of Australia and Africa, which are inherently higher carbon intensity, having to ship carbonate to China for processing using largely coal-fired power. So there's two issues there. Is one, the high carbon intensity of hard rock mines, and also the geopolitical issues where they have to go through China. We are producing battery grade chemicals directly in Chile to feed into the European and North American markets and elsewhere, with the advantage of Chile having a free trade agreement with the United States. So I think both on environmental and geopolitical grounds, we have a very, very interesting position in Chile.
You've mentioned already the plans to list in Australia, but what are the other sort of near-term milestones for the company right now?
Well, we've got a number of things coming up in the next couple of months. Now, one of course, is the ASX listing. We've talked about Chile being slightly different to most other countries in that lithium is considered a strategic mineral reserve for the state. The state of Chile is saying, look, they want to develop some of these other salars in Chile. They've identified 26 other salars which potentially can be exploited, of which 6 of them are considered high priority, and one of them being our Laguna Verde project. And the government will announce by the end of March whether the projects meet the government criteria to go forward into what's called their streamlined process, direct negotiation with the government on the terms of the operating contract. We believe we meet those terms. We've made our application, and there'll be an announcement at the end of March. We then have the pre-feasibility study results coming up, which we expect to be able to demonstrate the technical and economic viability of the project. In the last month, we have declared that at our pilot plant, we have been making very high grade lithium carbonate, 99.78% lithium carbonate, which exceeds the general 99.5% standard for battery grade material. We are going to be producing more over the course of the next couple of months so that we can start to provide large quantities to potential off-takers to start their product qualification process. Now, having demonstrated that we're making battery-grade material, having the pre-feasibility in place, having the operating contract in direct negotiation, we're then in a very good space to start substantive discussions with potential strategic partners to come into the project, take an equity participation, and more than that, bring in the finance that's required to bring the project into construction and production. So a lot of news in the next 2 to 3 months.
And you have been going back to the market with a new share offer for existing retail shareholders as well. Can you tell us a bit more about that?
Yes, we originally planned to do our ASX listing at the back end of last year, but because of a number of reasons, Australia shuts down in December, doesn't really open up again until Australia Day on the 26th of January. We decided to delay our ASX listing until early this year. And as we're getting close to getting this contractual situation with the government clarified and the PFS, we decided to delay the ASX list a couple of months. So we went to the market to get some interim funding, which we again announced last week, £2.4 million. We raised largely with our existing shareholders, Asian and Australian institutions, some sophisticated natural resource institutions. Now, having done that, we have comments from our existing retail shareholders. How can we participate? Why is it only the institutions that can come in at the with the offer that we made? And we said, look, okay, look, we will do that. We've extended the offer through broker options and through to next week to allow the retail, our existing shareholders, to come in through their brokers, and they can participate in the same way as the institutions have done. So we encourage them to do so. Contact your broker, and you can come in on exactly the same terms.
Also, I just wanted to ask you, why now with CleanTech Lithium, and why is it a good time right now for investors to be looking at the company?
Well, I think that there's a few things. I think the lithium market is at the bottom. The only way the price is going to go is up, as we've said. We believe that with the ASX listing, there'll be a re-rating of our share price. When we look at our peer group in Australia, our analysts believe we're valued at only 30 to 35% of our peer group there. When people see the quality of the project we've got compared to the hard rock projects, they'll rotate into CleanTech Lithium. So essentially, we regard the market as cheap, and CleanTech Lithium is cheap at the moment. And there's a tremendous opportunity for an uplift of our share price when we're on the ASX, combined with the news flow that we've got that we've talked about during the course of this chat.
And I wanted to talk more broadly about the lithium market itself right now. I mean, can you give us can you give us some perspective on where lithium is at the moment?
Yeah, I think everybody knows that the world is going in one direction. It is going to electrify its vehicle fleets, and there is going to be a mass take up of renewable energy, linked to battery energy storage. All of this requires lithium batteries. So the medium to long term is very high growth rates in demand for lithium for those batteries. We've had over the last year or so, the market's been in balance. The growth rates in Asia have been fantastic. In the US, it hasn't been as high as people expected, and there's been much greater production, coming out of Australia and Africa. So the price crash, from its $80,000 a ton high to the $10,000 a ton today. Um, all analysts recognize that for new projects to get financed, the incentive price for lithium needs to be somewhere north of $20,000 a ton. Otherwise, the projects which the world needs will not get developed. So we think we're bubbling along the bottom of the lithium market today. It's estimated 50% of lithium production today is operating at a loss. That's not sustainable. There's been mines in Australia have been closed, new projects have been mothballed. But we think that towards the end of this year and over the next year, the price will gradually start coming back up. And it needs to get up to that sort of $20,000 a ton to incentivize new projects. So we believe that this really is the bottom of the lithium market. The share price of lithium companies really mirror what's happening to the lithium price, although the market tends to move ahead of the commodity price. So we believe it's a very good time for those people who believe in lithium, want to invest in lithium. It's a good time now. It's the bottom of the market, and by making a choice of going for companies such as ours, which is going to be making green lithium in a mining jurisdiction of Chile, which is a strong lithium in industry, we should be in a very favorable position.
And I wanted to ask you also about the current sort of situation with US projected tariffs, and also China beginning to reduce some of the exports of rare earth metals. I mean, we've seen them, for example, looking at tungsten. Do you see that as realigning the lithium market a little bit as well? And is that beneficial for CleanTech Lithium?
Well, I think the issue with China and its participation in the battery supply chain, it has been absolutely dominant over the rest of the world. And clearly, the United States and Europe want to lessen the dominance of China, encourage homegrown industry, and also encourage the supply of battery materials from non-Chinese sources. So I think this is where it's very favorable for us. All the material from Africa and almost all the material from Australia has to go through China for processing. They have the conversion uh, technology. And Australia is trying to develop one or two conversion plants, and they're not having much success. Whereas no, Chile's been a producer of battery grade lithium chemicals for many years. So I think we have an advantage there. There's been discussion in China. They're looking at not just rare earth minerals, but should they be exporting the technology for lithium projects, both the technology and the adsorbents for direct lithium extraction and the technology for downstream conversion. No decisions have been taken there yet because Chinese companies are well established in Latin America, wanting to use direct lithium extraction. They want the Chinese technology to be used in Argentina and Chile. One of the companies we're working with, Lanshan, has an agreement with the largest private American company, Coke Industries, to jointly market their direct lithium extraction technology in North America and Europe. So clearly those technology companies want to continue with the status quo. But also, the reality over the last couple of years is that there are a number of European and United States and Canadian companies that have also been developing direct lithium extraction technology and the adsorbents. We've been working with them side by side. We definitely don't want to be absolutely bound to a single supplier. We want to make sure that we're covered in all areas. So if China stops supplying adsorbent or technology, there are alternatives in Western countries. Now, if you look at what's happening in Argentina, Eramet is currently um, commissioning the largest non-Chinese DLE plant um, as we speak, and that's with their own adsorbent and technology provided by French companies. You're looking at say Coke working in the United States. You've got Vulcan Energy in Germany developing its own DLE technology and adsorbent. So there are alternatives to Chinese. The Chinese were first in there. We think that they will continue to supply into countries like Argentina and Chile. But if there is any export controls which make it difficult, there are Western alternatives being developed at the moment.
And where would you see the main markets for the product from CleanTech Lithium project specifically?
Well, the world has also changed. If we go back 2 years ago and look at the demand in Europe and the United States, they were producing or wanting to use NMC, nickel, manganese, cobalt batteries, which require lithium hydroxide. Those are more powerful batteries, but at higher cost. We're producing lithium carbonate. And what we've been seeing both in Europe and the United States is that there's a pushback from the customer against the high cost of electric vehicles compared to ICE models. They want to see cheaper vehicles. And that means that there's been a much larger sort of growth rate in using LFP, lithium iron phosphate batteries, which are cheaper. And essentially, that's what China has been producing the lithium iron phosphate batteries, which require lithium carbonate. But those Chinese companies also recognize the geopolitical issues. So they have been investing rapidly in FTA countries like South Korea, Morocco, and putting in plants into Europe. so that they can access the European and the American market. So, no, we can definitely see that lithium carbonate going into the new LFP plants in Europe. That some coming into the United States now, and into those FTA countries of Morocco and South Korea.
And just to finish, the other thing is, I guess the other important consideration is, for many people, they think about lithium batteries and it's, it's something in my phone, or it's something, in my electric car. But actually, more and more, we're seeing these much bigger battery projects coming online where countries are seeking to store energy from clean energy sources like wind or solar. Do you think that that could actually, in many respects, create brand new and very large demand for lithium carbonate?
Yeah, I mean, if you look at the demand sort of growth that analysts have been saying over the last couple of years, it's largely predicated on the growth of electrification of vehicles. But the chief executive of CATL has been saying that they think the demand for batteries for fixed energy storage can even outgrow that of electric vehicles. And only yesterday, I see that BYD, the Chinese company, has signed a contract with Saudi Electricity Company to put in battery storage of 12.5 gigawatt hours. I mean, that's billions of dollars worth of batteries going into a solar array in Saudi Arabia. And at the bottom of this, it says BYD Energy Storage has delivered over 75 gigawatt hours of battery energy storage equipment to 350 projects in 110 countries. That is really going to be another very big growth area, which is going to match that of electric vehicles and maybe can even overtake it in the future.
No, it does look like lithium's got a bright future ahead of it. Thank you very much indeed, Steve, for joining us on the podcast today and giving us an update on CleanTech Lithium. And we look forward to seeing how things go with the ASX listing as well.
Great. Nice chatting to you.
You've been listening to the Armchair Trader podcast. Make sure you visit our website, www.thearmchairtrader.com, for your daily dose of financial markets news and sign up to our free newsletter there.